Hey now, I'm back with another trading strategy review. In this installment of Trader's Landing, I am going to turn this strategy from Marius and make it into an extremely profitable, complete trading system. But be warned, because this strategy is for intermediate level traders. That being said, stay around until the end where I show you how we can make this system even better with my popular optimization techniques. And if you want to see more content like this, then clicking on that subscribe button will make you infinitely smarter than this guy. I call this system ABC to MACD, and like most trading systems, it can be applied to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy uses two free TradingView indicators. As always, links and settings to all scripts are listed in the description below. The first indicator is the exponential moving average, or EMA. The length will be set to 200 and colored in white. The 200 EMA will be used for overall trend direction. The second free TradingView indicator is the moving average convergence divergence, or MACD. The inputs will be kept at default, and I am going to remove the MACD and signal lines. The MACD is one of the most widely used indicators in the industry and is often used to gauge market momentum. For this strategy, the histogram will be utilized. The MACD features a zero line, and when the histogram is above the line, it is colored in green, indicating bullish momentum. When below the zero line, the histogram is red, indicating bearish momentum. In this strategy, the oscillator will confirm the possibility of trend continuation. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar, and per your request, I am going to use 5-minute Japanese candlesticks. The rules to enter along on ABC to MACD are: first, price must be above the 200 EMA. Second, we are looking for an ABC pattern. The ABC price action structure is by far the most common price pattern to trade. It consists of 3 legs: the A leg, the B leg, and the C leg. Third, price must move above the top of the A leg while the MACD has been over the zero line for the entire pattern. All of that happens on this candle here. That is our trigger candle. Enter when price moves above the A leg, and do not wait for the candle to close. We place the stop below the B leg and target 1 to 2. When 1 to 1 is hit, move the stop to break even, and this one hits 1 to 2. If you enjoy this content, please make sure to click that like button. I have one more long example. First, price is above the 200 EMA. Then we are looking for an ABC pattern while the MACD stays green. Here is the A leg, the B leg, and the C leg. Next, price moves above the A leg of the pullback. Everything converges on this candle and it serves as our trigger. The stop is placed below the B leg and 1 to 2 is our target. When 1 to 1 is hit, move the stop to break even, and this one hits our 1 to 2 target. Now we flip to shorts. This is what I will test for shorts. First, price must be below the 200 exponential moving average. Second, we are looking for an ABC price action pattern. Here is the A leg, B leg, and then we have the C leg. Third, price must move below the A leg while the MACD is below the zero line for the whole pattern. All of that happens on this candle here. That is our trigger candle. Enter when price moves below the A leg and do not wait for the candle to close. The stop is placed above the B segment and the target is 1 to 2. When 1 to 1 is hit, move the stop to break even. And this short most likely stops out at break even with the spreads. I'm going to show you one more quick short example. First, price is below the 200 EMA. Next, we can see a clear ABC pattern. We have the A leg, B leg, and a C leg. Next, price moves below the A leg while the MACD histogram is red for the whole pattern. Enter when price moves below the A leg while the MACD is below the zero line. All of the rules converge on this candle and it acts as our trigger. The stop is placed above the B leg and 1 to 2 is the target. When 1 to 1 is hit, move the stop to break even, and this scalp quickly hits the target. I am going to give you some wonderful ideas on how we can make this system better along with a Trader's Landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do all the required testing and be sure to let our community know what you discover. That being said, this strategy is very subjective because you have to identify the ABC patterns yourself. So this system would take much practice on the charts before you could consider backtesting. This test was done on Bitcoin versus the US dollar 5-minute candles. It took a quick 1 month to find the 100 trades, 46 hit the 1 to 2 target, 22 stopped out at break even, and 31 stopped for a loss. Most wins in a row turned out to be 5, and most consecutive losses were 4. This dataset provided for a 68% win rate and a great 2.87 profit factor. The gain on account turned out to be 116%, risking 2% per trade. And stay tuned for my 6 amazing optimization tips to get this system really cranking. So the equity curve here is really quite nice. There is only one extended drawdown period, but the remarkable thing about this system is how it performed during these conditions. If I overlay the 5-minute trades on the 1-hour chart, you can clearly see only one big trend, and then a lot of consolidation. This could be an indication of the strategy's versatility, most likely due to the market structure component, the tight stops, and sniper entries. But as I always tell you, more testing is required. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 7 due to the profitability potential and system versatility, but not a higher score because of the subjectivity involved. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, adding hidden divergence to this strategy could get you into larger moves and thus give you the ability to have a larger risk to reward ratio. Look here, where we have a higher high on the MACD histogram and a lower high on price. Then we get a huge bearish move. This system is screaming for hidden divergence. Second, like I showed in this video that featured the Turkish getup system, using the triple moving average can get you into more positions. On this chart, you can see where the 200 EMA is lagging behind, but the 200 TEMA gets you in. If you are a serious scalper, then you want to look at the DEMA and the TEMA for trend direction confirmation. Next, like I always talk about, you need to figure out a way to align your trade with the higher time frame. Look where we have the MACD on the 5-minute chart that doesn't get you into any of these setups. But if we change the time frame resolution of the MACD to 1 hour, we are all green, validating these signals. Fourth, keeping the focus on the MACD, the original strategy requires the MACD to stay the same color for a valid entry. However, the biggest moves come after a pullback that takes the histogram to the other side of the zero line. You can see on these examples it is something to consider, and this may enable you to greatly increase your risk to reward ratio. The next tip is akin to how I trade, looking for a pullback that creates a channel for the B leg. And then we look to get in when that channel is broken. This example adds the confluence of the rejection on the 200 EMA. A sweet setup for sure. Now we come to a very advanced technique that I used to trade myself. Look here, where the C leg of the structure hits the 1.618 Fibonacci projection of the A and B legs. This is a classic Elliott wave pattern that indicates an impulsive 5-wave move. When that projection level is hit, the B wave is now a wave 3, which has been confirmed by the projection. And here we can see what I call a snake on the stochastic RSI, where the indicator stays in the overbought zone during the entire move up. So now what I would look for is a retracement into the 236 or 382 Fibonacci levels of wave 3. Along with the stochastic RSI being brought down into the oversold territory very quick. And then we can project the length of wave 1 from wave 4, and we can see that the 1-to-1 target is hit. Like I said, this is very advanced, but something for discussion. Let me know in the comments if you want me to go over more complicated strategies like this one. Check out this playlist for more profitable systems, and have a great day, because you deserve it.